Hi, I'm Brent Farley with Farley Law. I'm the managing member of Farley Law. We provide regulatory services for banks and financial institutions. And today, let's talk about ACH payments versus FedNow payments. This is an important topic because we're seeing an increasing pressure and shift to a demand for immediate or near immediate funds availability or near immediate funds transfers. And the ACH network can't do that. So today I want to talk about, okay, what are some of the differences between the two settlement systems? What are some of the advantages and some of the disadvantages of the two payment systems? So let's start with ACH. So ACH has been around for quite a long time, several decades. And the ACH system, it's a net settlement system and it's a batch payments system. And so what I mean by that is payments are processed in batches. That means a bank will take a large number of payment orders. They'll stack them all up. They'll transmit them all at the same time, maybe once, twice, three, or maybe four more times a day through the payment settlement system. And then as the batch payments are submitted to the system, they're tallied up between banks, and then they're settled between banks. And they're settled on a net basis. What that means is that if I have Bank A and Bank B, Bank A will tally up all the transactions that are going to move to Bank B. Bank B will tally up all the transactions that will move to Bank A, and then they settle the difference between the two transactions. There only needs to be one transfer between the accounts to make that settlement. ACH has gotten faster over the years, so right now we're dealing with same-day ACH payments, where the batch payments are settled 3 times a day, or at least transmitted 3 times a day, and settled on a same-day basis. But there's still a delay in funds availability. So what does ACH work really well for? It works really well for transactions where you can predict the need for payment. So recurring transactions, loan payments, bill payments, or where you haven't forgotten to make your bill payment. They work for payroll really well. They work for a lot of other transaction types really well, where the value of the transaction can be known prior to the date that it needs to be settled, or at least some period of time before it needs to be settled. So that's what works really well for. Lots of dollar volume moves through the ACH system. Most of the payment services that we use move through the ACH system. So your credit card, your debit card, even a lot of third-party services will stack their payment services on top of the ACH rails. And so most of the payments transaction volume in the United States runs on the ACH system. Drawbacks. Because the ACH system it's kind of delayed settlement and it's not immediate. In a lot of cases, the delayed settlement introduces a credit risk for either the transmitting or the receiving depository institution, and then also to some extent for a customer, because you don't quite know whether or not a payment might be returned, or you don't quite know all the time whether or not funds might be available for a payment when it settles after it's. So there's some techniques for resolving and mitigating that type of credit risk, but it does exist because of the delay in settlement. So that's one of the main drawbacks of the ACH system. Doesn't work well for immediate payments. We have same-day ACH. It's close to immediate. It's not immediate. So there's not quite a method to verify when I'm trying to send a payment, whether or not it's received immediately, or whether or not I need to draw a payment, whether funds are available immediately. A lot of third-party payment services and large banks have at least resolved for internal payments ways to work around that. So if you have a very large bank, they can make ledger transfers internally so that you can have a near immediate payment. Or if you work with a Venmo or a PayPal and you're transferring to participants in a system, those transfers can be made very quickly. However, if you want to transfer out of that particular system, then it's delayed, and that usually happens on the ACH rails. So you'll see pending payment notations if you're looking at online banking, or you'll see memo posts, and so you can see funds should be coming, and then you'll know when they'll settle later that the funds have been transferred. Moving on to the FedNow system. So FedNow is targeted at making funds available immediately. And to do that, you can't really do a batch payments system because there's not going to be time to sit around and wait for payments to tally up in order to settle them. There's not really going to be time to do net settlement either because you're not going to have time to tally up a whole bunch of payments and then swap them between large banks later on the day. So what's happening in the FedNow system is when a customer makes an order, submit an order to the financial institution. Right now, a lot of those services are looking like they're using online banking. And then the financial institution will submit the payment information order to the Federal Reserve, because the services run through the Federal Reserve. And after that, Federal Reserve will send a payment instruction to the receiving bank. And in those steps, there are some validating steps where information about the transfer and the sending transfer and the receiving transfer are validated by the financial institution of the Fed. And then immediately after that, funds are exchanged through the master account of the two banks at the Federal Reserve. There will be a methodology for a larger bank to have a correspondent banking service. So a bank that does not have a master account at the Fed can tie into the service. But what is primarily happening is that as the transactions are coming across, they're being settled on the bank's ledgers at their Federal Reserve bank accounts, and so the transfer can be immediate. Last time I spoke with somebody at the Fed, it was about 20 seconds between the time you ordered the transfer and the time the transfer is made, and then the funds are gone. It's settled and it's done. So you know that funds have moved. The transaction is over. You're not waiting 2 days. You're not waiting a day. It's over and it's done. So major advantages there are you eliminate that credit risk that would appear when you're doing delayed settlement and when you're doing net settlement, because you know now whether or not there are funds to be transferred, and they're transferred now. So it's great. What will it work great for? It'll work great for transaction where there's a value in immediate settlement. So all the payment services that we use now really regularly with a card where you swipe it, those transactions are settled 2-3 days later. They will be able to be settled immediately. So no consumer is waiting around to see if there's, you're not waiting around to see if a consumer's account will bounce or if there's funds availability a couple of days after they swipe their card. You know the funds are there now, they're moved now. The consumer knows that the funds have been moved out of the account. They're not waiting around to see the funds move out of their account. I forgot to make my bill payment to set it up in my bill pay. I can do that now. I forgot to make my loan payment. I can do that now electronically. It's near immediate. This service is available 24/7. So I don't have to submit a transaction necessarily within a cutoff time for it to be made today, which is really good. So all of those advantages that come with immediacy should be available within the FedNow payments service. Third-party services should be able to stack their payment services on top of the new infrastructure. Banks should be able to use the infrastructure pretty readily. It sounds like that's typically occurring through online banking. Disadvantages. It's new. So not every financial institution is going to be well adapted to it and won't understand quite all of the risks that are associated with it. So there's going to be a learning curve. Disadvantages. There is a disadvantage that comes with immediate payment. If you make a payment in error, it is gone. There's not an opportunity to go back and try to fix it necessarily. You like with wires, ultimately you could try to have funds transferred back through background communications, but the funds transfer is very immediate, and so by nature there are some detriments that come with that. On the back end, maybe one thing that's not quite so obvious with the immediacy is if you have banks who are exchanging payments with their master account at the Federal Reserve and the system is highly automated, then there is some chance that the master account of a bank could become depleted in a midday scenario or an after-hour scenario. And so there needs to be some opportunity for liquidity to supply funds to that master account in case it's depleted. The Fed is offering liquidity service to fill that need. That is something to think about if you're going to use a FedNow service and offer payments. We're a law firm, so let's talk a little bit about the legal underpinnings. The ACH legal underpinnings are really well known. The Notch network sets up rules that banks have to follow when they use the ACH service. Those rules tie in with the UCC Article 4A, and the Federal Reserve also has Regulation J that talks about how payments move through the Federal Reserve network. FedNow service is run by the Fed, runs on Fed rules. It should tap in somewhat to Article 4A of the UCC, because Article 4A of the UCC is generic with respect to funds transfers. I don't think at this point that the payment service has been around long enough that we have seen all of the rulemaking that will need to take place to manage fraud and risk and the increased speed and availability of funds. Where do I think this is going? I think ACH rails will stick around for quite a long time. They've been around for quite a long time. It'll take some time to move to new rails. And there are some payment services where they're very well adapted to ACH that may just stay on the ACH rails indefinitely. However, there are a number of services where an immediate payment would be very healthy for the payment system, for the end user, for the bank, for the recipient. And I think those types of services are the ones that we'll see move more quickly to the FedNow payment service because of all the advantages that come with that. Primarily because where an instant payment is needed, you don't have to wait for the funds to become available later. There's no time for funds to sit around and kind of marinate. One of the main scenarios I can think of is if you have a large transaction where there's a need for immediate transfer of funds, like if you're buying a piece of real property, you're transferring funds to a title company, you don't have to wait around for it to show up. You know it's going to show up, it's there, and then it can be immediately transferred to the next person. So you can exchange documents and signatures and funds and move into your house a little bit quicker, or move into your commercial property a little quicker than you otherwise could. Probably lots of other payment scenarios, and I'm really interested to watch this area and see where it goes in the coming years. If you have comments or questions, happy to visit with you. You can reach us at banking@farleylaw.com. Thanks. We'll see you.